Sustainable investing, also known as socially responsible investing, SRE, ethical investing, or impact investing, is an investment approach that considers environmental, social, and governance (ESG) criteria in addition to traditional financial factors. The goal of sustainable investing is to generate positive, measurable social and environmental impacts alongside financial returns. Investors practicing sustainable investing seek to align their investment choices with their values and contribute to positive societal and environmental outcomes. Key components of sustainable investing: environmental considerations, climate change, assessing a company's impact on climate change, its carbon footprint, and its efforts to reduce greenhouse gas emissions. Resource management, evaluating a company's responsible use of natural resources, including water, energy, and raw materials. Renewable energy, favoring companies involved in or transitioning to renewable energy sources. Social considerations, human rights, evaluating a company's respect for human rights within its operations and supply chain. Labor practices, assessing a company's treatment of workers, including fair wages, working conditions, and labor rights. Diversity and inclusion, considering a company's commitment to diversity and inclusion at all levels of the organization. Governance considerations, board diversity, examining the composition of a company's board of directors in terms of diversity and independence. Ethical leadership, assessing the ethical behavior and transparency of company leadership. Executive compensation, evaluating the fairness and transparency of executive compensation practices. Positive impact investments, actively seeking investments in companies, projects, or funds that contribute to positive social or environmental outcomes, such as clean energy projects, sustainable agriculture, or healthcare initiatives. Exclusionary screening, avoiding investments in companies or industries that engage in activities perceived as harmful or inconsistent with certain values, such as tobacco, weapons manufacturing, or fossil fuels. Integration of ESG factors, integrating environmental, social, and governance factors into traditional financial analysis to assess the overall sustainability and resilience of an investment. Engagement and advocacy, engaging with companies as a shareholder to advocate for positive changes in their practices or policies related to sustainability and corporate responsibility. Environmental impact considerations. Climate risk, assessing how companies manage and disclose climate-related risks and opportunities. This includes evaluating their strategies to adapt to climate change and transition to a low-carbon economy. Biodiversity conservation, considering a company's impact on biodiversity and its efforts to minimize negative effects on ecosystems. This is particularly relevant for industries such as agriculture, forestry, and mining. Renewable energy, evaluating investments in companies involved in renewable energy sources, such as solar, wind, and hydropower. This supports the transition to a more sustainable and low-carbon energy system. Resource efficiency, assessing how efficiently companies use resources, including water, energy, and raw materials. Sustainable investing encourages investments in companies that prioritize resource efficiency and minimize waste. Pollution and waste management, considering a company's policies and practices related to pollution prevention and waste management. Sustainable investors seek companies that minimize their environmental impact and adhere to responsible waste disposal practices. Sustainable investing recognizes that companies with strong environmental practices are often better positioned to manage long-term risks, adapt to changing regulatory environments, and contribute to a more sustainable and resilient global economy. As interest in sustainable investing continues to grow, there is an increasing emphasis on transparency, disclosure, and standardized reporting of ESG metrics to aid investors in making informed decisions that align with their values and sustainability goals.